what are the different types of retirement accounts? We get asked that a lot, and I want to break it into two categories. First, we're going to talk about individual versus company sponsored. And then we'll talk about traditional versus Roth. Okay. So, first of all, company sponsored is anything that you get from a company. So, for the majority of this is 401ks. However, if you work for a nonprofit, you could also have a 403b. There's also some 557 plans, profit sharing plans, deferred comp plans, pension plans. All of those are sponsored by your employer. The rules on how they work, how much, what investment options there are, if there's any matching, that is all set by your employer. Now, I do suggest that you take advantage of those, especially if there's matching opportunities, at least up to the match, because that is free money. Now, individual type of retirement accounts is either just a traditional IRA or a Roth IRA, or in honestly, the full meaning of it is an annuity, a deferred annuity. Now, as we went through all the different types of annuities in a different video, but deferred annuities are considered in and of themselves retirement vehicles. So you could have an IRA or a Roth in there, but if you just put money that's not an IRA or Roth in an annuity, you still are you can't take it out before 59 and a half. Now that is key for almost all of your type of retirement accounts, whether they're employer sponsored or things you do on your own. If you take the money withdrawals out before 59 and a half, there is tax penalties for anything that is traditional. And traditional means that you deferred the taxes. So instead of paying the taxes now on the money, let's say you took 6,000 you were contributing, whether it's be an IRA or traditional 401k or any work sponsored plan, you defer the taxes on that 6,000 so you don't pay taxes on that now. However, later on you'll take that out. Okay, that's the different. Now a Roth, whether it be a personal IRA Roth or in a lot of 401ks, you have a Roth option. If you put it in that Roth option, you pay the tax on that 6,000 now, but you do not pay the tax on any growth in the future. So we talk about that being traditional. We're paying it on the tax. We're deferring the tax on the seed, and we're later going to pay it on the harvest. Where Roth, we are going to pay the tax on the seed and not pay it on the harvest later. So again, you can do things that are company sponsored, or you can do it on your own, and you can do either traditional, which most company sponsors are by design traditional, or you do sometimes have the Roth. 401ks often will have a Roth option as well. And so those are really the different types of retirement vehicles. Now, you could put money in just a brokerage account and save it for retirement too. The difference is it's just not taxed and falling under the retirement plan rules. Again, if it's traditional and you take it out before 59 and a half, you pay an additional tax penalty. If it's Roth, there's a little bit more leeway where you can take out maybe some of your contributions, but they have to be in for 5 years. I mean, there's still rules with a Roth. The other flip side is if you're saving money in a retirement plan, not only can you not take it before 59 and a half, there's limits to how much you can put in each year. Depends on your age. Some of them depend on your income. And then if it's a traditional setting, you do have to start taking it out at a certain point in time. Right now, that's 73, and we'll talk about that on the required minimum distribution video. But anything that is considered a retirement vehicle, that means it's structured in ways that have regulations on how much you can put in, when you can contribute, how much you can take out, when you can take it out, all of that. So if you have questions on what's right for you, or maybe you have a retirement vehicle at work or something, and you're not sure you understand it, you don't know how this pension gets paid, any of those things, feel free to reach out and we'll walk through it because you want to make sure that you have what's right for you.